Finally trying to train Tom how to use a drone and be excited about machinery. How am I supposed to soar like an eagle surrounded by turkeys? No, we're asking for too much.
Afternoon everybody, it's the 30th of November on a Saturday. I've come in because I've had a special request. Santa Claus is making a special appearance with us this afternoon. Unfortunately Rudolph's not very well, so he needs a sleigh driver, and this year we're going to take the 1167 down as the sleigh because that's all we've got available, and we need to make sure that Santa gets there, so we need reliability. So yeah, we're just about getting ready to go, going down to Caldecott Primary School to surprise all the children. Hopefully there's a good turnout and everyone's looking forward to it. So Santa's started early, and hopefully it'll be a good afternoon. So we just got back from successfully delivering Santa down to Caldecott Primary School. Lots of children out the front, everyone was excited to see him turn up. Had my instructions to go back at 4 o'clock. Santa also gave me instructions to everyone that watches that isn't subscribed yet. He would really like you to subscribe to our channel because you know, you guys make us. So hit subscribe and like, and we'll see you again soon.
So on the tracking software here, you can see that Kieran's out there. He's just come back to the yard, so he's been out spraying, and Glynn's been out. So the two self-propels, they run okay this year. We generally don't use the trails because the self-propels travel better. They've got bigger rolling circumference wheels. They make less mark. We don't want deep tram lines going into the summer time when, you know, we'll go to drill it and whatever, and we've put ruts in. And he's working on top of ploughing as well. So he's got about a 4-inch indent, but that's okay for this time of year. And yeah, so there's a picture of Kieran spraying. We're finally trying to train Tom how to use a drone and be excited about machinery. So hopefully his footage is better. Santa's elves have been busy. They've the orders that came in last night after we did the video, quite a lot of orders. So the October drilling t-shirts, which, oh, I don't know where they are now. Where are they? So this one's in the wrong green, but anyway, humorous. So we've got these ones here. We've got the beanie hats, etc. People have put in some orders, so we do these. Tom's off to Tesco's now to make sure they start getting out to people. We're going to do them in batches. So do your ordering. We'll do them in batches and we'll keep sending them out to you so you've got them all ready in time. I hope you'll be really pleased with the quality of them, and I hope they make somebody happy for Christmas. Sun is shining. Yesterday was a pretty awful day. We're going to try and get out spraying this afternoon if we can. The guys are in the workshop doing some paint spraying, got the heaters running. So today's an important day to start looking at the crops which are in store. How's the marketing plan to date gone? What's the marketing plan going forward? And also then now we've drilled up looking at what we're going to do for next year. Now this actual grain marketing side is a lot of people, you know, don't really want to spend or focus much time on it, but we have to make a bigger part of impact in the business from doing this than I can actually in the day-to-day farming and growing a crop, especially in the shifts in the market when it's volatile. So I have a screen up here which I run in my office, which basically is Nogger's blog, and it just shows what the market's doing on a sort of 15-minute on a futures rotation. So you can see at the moment where it's red means the prices are going down, where it's green it's gone up. So it's, as it stands, it's not looking good on the markets going down. So to help me with this, because I farm for quite a lot of people, and if we grow, for example, 20,000 tonnes of wheat, for every pound that the market goes up or down, there's a difference of £20,000 just on that one commodity. So for us, getting the marketing side of the business right is really important. It's also important that I'm able to deliver to the people I farm for in terms of contract farming. But actually what we're doing, there's a science behind it. and we agree a plan with them so that then we can execute it, and then everybody's happy with the results, as opposed to making a fumble. Because if I get it wrong and I'm £10 behind in the market and it's not agreed strategy, that's £200,000, and that's going to affect both parties. So I've have a professional advisor who comes into the business, sits with me quarterly. We go through the strategy so far, the strategy going forward, and also looking in the future as well, not just next year, but maybe 2 years ahead, and getting a bit of insight into what the market's doing and what is available. And I use James Bolesworth, who's here from CRM, and I welcome him today, and we're going to sit down and start going through today's plan and next year. So we've got the meeting booked today, and I said to James, "Oh, you don't mind coming on the camera, do you, James? And tell us all your secrets, and we can work out, what we're going to do in this business." And he was very clear to me that you've got to be mindful that you've got to know the whole story when you're looking at numbers. But hopefully we can give a bit of an insight into the logic in what we're trying to do. And James, do you want to just give a 30-second introduction into not 5 minutes. No, I won't do that.
I can talk all you want.
In who you are and what your business does.
Yeah, absolutely. So, I mean, as you sort of alluded to already, we work with farming businesses who essentially want to take more accountability for their grain, focus more on it, and realise that it is such an important part of ultimately their financial success or failure at the end of the day. What one stat I always have in the back of my mind is, yields vary on average in the UK for wheat, say, by 20%. That's a big variation. But as we've seen in wheat markets, you're talking about 150, 200% in some instances. And so what we say is, you've got to still focus on the yields, but invest something in the marketing. It doesn't have to be a lot of money, but time, understanding, knowledge, and understanding how to make those marginal gains, adjust your strategy accordingly, and do everything which we discuss on a regular basis. Understand the seasonality, understand the data, and just take time to really build the rules around your marketing strategy. And then that goes a long way, rather than just sitting there and having a directional opinion, bullish or bearish. It's about how to understand, most importantly, how to manage risk.
So do you think as farmers, mostly we all say that we're going to do better next year, or do you think we all say we did really well and, I hope we do even better the year after? Because I always think marketing's like gambling.
Yeah.
Even though as a farmer, I don't actually gamble, but I think that actually if you looked at the business and you looked at the markets, you say that actually farmers are very big gamblers. Yeah. They put a seed in the ground, they don't actually know what it's going to yield, they don't know what the season's going to do, and they don't know what the price is. And actually, you could sell on that day, of course, when you planted it. But if you had a crop failure, you've then got to buy into the market to replace the grain in which you sold against. Yeah. And you don't know the quality. And I grow milling wheat, so that's slightly more difficult. I do take a level of risk and a position on that, but not 100%. And also, as you said, 20% variation. I mean, we've seen up to 30% this last year. I think we've seen more variation in yield in the last few years than perhaps we've ever seen. Yeah. Historically, for the family, grandfather would have got the ICI 10 tonne a hectare club tie. And I don't know if that was an average or whether that was just merely they achieved it in one field. But anyway, they got the tie. And since then, obviously, my whole Nuffield scholarship was about taking the 10 tonne a hectare average yield and starting to go 20% and higher. Well, 18% is typically what the project was on CTF. So it's how do we not plateau? How do we move forward? That's the main focus in the business year after year, why we get different cultivation machines, why we get different drills, different strategy. And that is, as you rightly say, that's making a difference to yield. Now this part, 150% swing, that's extreme, isn't it?
Absolutely. And we have seen the extremes of the market in the past few years for all the reasons, be it war, weather, COVID, everything everybody's very aware of. But yeah, the point is, what do you do about it? And historically, conventionally, I'm sure your father would have seen £1 a tonne a month, relatively little volatility, and there wasn't that much thought which had to go into the markets.
Almost £1 each month. Exactly. And it's either store it or sell it.
Exactly. Yeah. But the market's changed, and so our point is the strategy needs to change, and the market is always changing. You have the influence of outside investor money, algorithmic trades, the macroeconomy, Trump at the moment is a big one. One of the ones to discuss today, which has emerged since our last conversation, is a very real risk. And from the perspective of Trump, from the perspective of trade, the dollar, geopolitics, and then that ties into the war in Ukraine as well. So there's a lot going on, and it's just about understanding not necessarily where markets are going. Nobody can tell you where the price will be in 6 months' time. It's understanding what are the risks in the market at any given point in time. Where are the opportunities for you in your business and the crops you're growing to make those marginal gains and lock into those opportunities as and when they appear? And most importantly, how can you just draw a line in the sand and offset as much of that risk as possible? For example, in the case of milling wheat, which you grow a lot of, that might be just saying, okay, I'm going to put a min-max contract in place, and that will at least put a floor in what I'm going to get for my milling premiums next year.
Yeah. But I've just done some quick numbers on the milling wheat. So if you look at the, if we go for a modest yield, and we go for second wheats and first wheat, I've got a few second wheats. We're looking at this next year of about between 18 to 20,000 tonnes of milling wheat, dependent upon what the yield's going to be, and which fits nicely with the store, which is 20,000 tonne. So we've got the ability to clean. We've got to clean all the milling wheat we grew this last year because there was ergot in it.
Yep.
But fortunately, we've got the ability to do that. So everything we're delivering out to millers, obviously, has been cleaned so it's ergot free, and we'll actually guarantee that as well, and it will bring it back.
You found a market for the ergot yet?
No, definitely not. No. No, I'm waiting for some wild Cambridge hippies to catch on. For Becky's got a load of ergot, and I can make a lot of money quickly. But on grain sales terms, we need to sell after harvest to pay the rents in the end of September, and so we've got cash flow requirements, and we've got then fertiliser and chemical bills to pay in October, and maybe seed. So we have trigger points that we've got to fulfil. And then obviously some of the rents are quarterly, so we'll have some more rents coming up at Christmas, so we'll need to make some sales then. And then some of the worst times going into sort of spring, May, June, that they can often be pinch points for cash flow.
Yep.
So I can keep the grain until the end of June. I could keep it longer. I'd prefer not to. Last year I did do July and August contracts for old crop wheat, and we had to move it physically to one end of the store so that we could take the infill. The main disadvantage with that, I was rewarded. I got over £100 a tonne to do that in the premium terms, but 103 I think it was. So there is a cost in moving it from one end to the other. There's also an interest cost. Now, years ago, interest costs when it was 0.5% above base and base was 0.5% again, it wasn't the biggest consideration. Suddenly, if you're looking at 8.5% on financial costs, suddenly you realise you're at 125, things like that per tonne per month. So actually, the cost of storage isn't being balanced out. You've got both. So you've got £2.50. So if you're not seeing a £2.50 plus rise, you would be better to sell earlier, and then not have the financial cost in interest terms.
It's also the market as well, and understanding if the market is paying you to store. And you mentioned, in some cases that's carry. Last year we saw an exceptional carry. We were having discussions at the time.
Yeah.
The carry was there. Every farmer and merchant, who was in a position to do so, was selling that carry, and we saw a lot got rolled forward into new crop. And that's where we saw that end of season spike in prices, which in your position you were able to take advantage of, but many weren't for obvious reasons. But sometimes the market will pay you not to store.
Yes.
We see it's what's called backwardation, and you see it quite often in the rapeseed market, where you have higher prices on the near term than you do on the far, and that's a common market structure. Whether you're looking at oil or coffee or whatever it might be, you can see the market either in that backward structure or in contango, as they call it, which is just the pound a tonne a month or 2 or 3, whatever it might be. So again, that is how you look to make those sort of marginal edges, rather than just taking the long-term view as I think the price is going to rise and I'm going to sit here until it does. It's looking for the opportunities in the market and trading those, because you're not looking to beat the market by 50, 60%. You might be, but you're not going to do that continually. But what you can do is take advantage of all those incremental opportunities which present themselves, and that adds up over time. And it's that compound effect which we aim to target, really.
Thank you for opening the window, James. The heater was on, and I could see Alexandra in the corner of my eye coming across at pace from the cross courtyard. And I thought she's going to come in. I know she's going to come in. She did come in. I'm sorry about that. But the radiators are on. Obviously, Marit's in, and she's obviously cold because I don't know what she's turned them up to. But obviously, with my jumper on and my jacket, suddenly I was getting under pressure, and it wasn't down to the grain sales. I was starting to get the sweat on. So, just thinking about what is the price today then? You know, what could I expect for, let's say, a January delivered milling wheat?
So you'd be looking at a feed base of, say, 180 to 185, and then you would be looking at a milling premium of 30 to 40 pounds a tonne right now, if you were selling today.
Right. So when I originally was selling back in May and obviously October, we were started at £70 a tonne and probably down to £60 a tonne premium. You're now saying the premium has dropped down to 30 to 40.
Yep, and 30 to 40. We've got to remember, coming from 60, 70 is well outside of the bounds of any normal premium. It's an exceedingly strong premium. And the factors we saw converging, we mentioned a lot of rollover crop from last year. Every farmer and every merchant who was in a position to do so rolled it over because of the carry. You then had harvest hitting the market, albeit a small harvest, 11 million tonne wheat crop here in the UK, a reduced crop across the EU too, and indeed in the Black Sea, particularly Russia, who 12 million tonnes off with an 82 million tonne crop this year. But all of that crop was still hitting the market on top of the harvest arriving. And then in the UK, we saw the pound strengthening. And at that period of time, we also saw end users and merchants doing a lot of import. And the import pace for milling wheat and indeed for maize, for wheat and maize, was extremely strong from about July onwards. And that was because really the writing was on the wall for the crop coming and the deficit we would be in and the fact we would have to remain a net importer. So a lot of the imports were being front loaded, and that was facilitated by a strong pound. So we're now in a market where...
And is the pound stronger now than it was then, or where are we?
It's strengthened, and then we've seen Trump come back into power, the dollar's started to surge, and we've reached a bit of a plateau in terms of the Euro GBP.
Okay.
So it seems to have stabilised for now, and we're certainly seeing the pace of imports really slowing. And that is for a couple of reasons. Firstly, you don't have that sort of strength of the pound, which is facilitating it, or the pace of the increase in the pound. And then really you go down to the sort of core fundamentals. And this is where it's quite interesting, is because we've had a reduced crop here. That's no surprise. That was
But that happened across Europe though, didn't it?
Yeah, exactly. And so...
Where are the imports coming from?
You look now, and if we are talking about milling wheat specifically, you're looking at predominantly German origin and Canadian origin.
Okay.
And so we could see the exports from Germany very high, and that pace has continued. But you've got to remember...
And they've been having pressures of Ukrainian wheat coming in.
Yeah.
So we shifted it across. It's almost Ukrainian wheat coming across.
Yeah, and that's why you've got to look, okay, so how long can this last? Will the supply and demand support this constant flow? And we know that the EU had a reduced crop. We look here, you're about 135 million tonnes last year. You're looking close to 122 million tonnes this year. You look at Russia, you're 93 million tonnes last year. You're now closer to 80 million tonnes this year, and that's not looking like it's going to pick up next year. So all that's doing is drawing the global level of stocks lower. And this is a chart which we'll look at in most of our meetings. But
are you suggesting that it won't be this year that will do well? It could be the following year.
I think right now what we are in a market, in a situation where, as you can see here, there is just no cushion in the global market to see any sort, or to facilitate any sort of supply issues next year. And arguably, right now, the fundamentals suggest that prices need to be higher than where they are today.
Right, well, we don't want to tell everybody our secrets, do we? So we've got to keep something back. But so we'll just work on this plan then for what we're going to do this next, I suppose, 8 months of this year. And I think we better start thinking about what we can do over the next 15 months for what is actually planted. Because now it's come up, I actually feel confident to start making sales. Until it's come up and poked its head up, I don't have the confidence to do it, purely because, you know, we've seen such volatility in germination and ability to drill. You know, we've got volatility everywhere in the business at the moment. It's extraordinary. The change in my style of farming, my management style, to perhaps what it would have been when I was at college, is so very different now to how it would have been. You know, and the skills, that's why obviously we're employing people to come in and advise. Obviously we make the decisions, you know, will suit us. But at least I'm going to see people I farm for with some knowledge and giving them confidence that the plan we're putting forward is right.
Yep.
And then we sort of, you know, agree it together. And then the only way to really benchmark yourself is to design a thing, like you said, the little and often, and then have that running the whole time. Yeah. And then actually see.
You don't even need. You just have the average of the market.
Yeah.
Assume that's little and often.
Yeah.
And then you benchmark against that.
Yeah.
Because if you benchmark against a pool, then there could be a £15, £20 30 between pools.
Yeah.
So which one are you benchmarking?
Yeah. I shouldn't think that people doing the pools would want to see that level of variation, there, would they?
Absolutely not. Yeah. And it's another mechanism to manage risk. And you've got your own sales, you've got pool sales, you've got selling direct to end users. It's all part of that spreading the risk, isn't it?
Yeah. No, that's good. Right, we'll get stuck into that.
Right, Big G, we'd like to understand that we spent half a day trying to fix the drill.
Airlocks in rams are
And
terrible.
it turned out that the light didn't come on. Why did the light not come on?
There was no power to it.
And why was there no
Didn't work
power
out.
to it?
The screen wouldn't come on for some reason.
Because you hadn't pressed it. So, how much time have we spent?
Just over half a day.
Because you didn't turn it on.
Not
Right,
my fault.
He's struggling. He's
Not my
struggling.
fault.
He's struggling to admit it.
I've
isn't
not
he?
had sufficient training, that's what it is.
Training to do what? What, 2 drilling seasons with that drill? You haven't managed to have sufficient drilling training.
But I can vouch it's all good now.
Oh.
Perfect.
Right, it's good for next year.
So this is the Shed of Dreams. It's where we're going to have the open day event. Will be in this barn. So they started to tin the sides. So hopefully by next week that's all tinned in. Chris then can start. They'll be out of here then, and we can start concreting. But what were that statistics you were telling me, which I thought was interesting?
Along the lines of productivity, and essentially talking about how there's about 8 to 10% of farmers in the UK producing around 60% of all the produce.
8 to 10% of farmers in the UK produce 60% of the produce. And then considering that we're then 61% food produced here, so that means that we're 39% imported. But of course, there always will be an element of importing if you want your bananas and your fruit and things. We're never going to get around that, are we?
But it's also food security, isn't it? So you want to make sure that not all your food is coming from one region, from a small handful of farmers. You want that diversity, because otherwise you're not secure.
But if you've got 8 to 10%, then it's surprising that they're not rewarding expansion or efficiency or growth in those areas. Because currently, as it stands, a 100-acre farmer can achieve the same subsidies in terms of grants, etc., that I can achieve on 12,000. I mean, we obviously started with 700 acres as a family, and obviously don't own this 12, but we're farming 38 people, but I can't get 38 worth of holdings proportionated to the business, even though there's 38 land holdings which are operating effectively from this one site.
Yeah. Well, as we were talking about, is funding in all its various mechanisms better off being more targeted at those people who are best suited to do produce and do sustainability and do energy, and therefore you're putting the eggs in the right baskets and maximising that funding. It's not saying everybody needs less funding. It's saying let's target it at those areas where.
Well, I've always thought that if we're supposed to have a percentage of land out of production, there ought to be a market that was developed. For example, if I wanted to crop 100% of the land, because we could produce 10 tonne a hectare, which was, you know, maybe 40% better than some other areas or the average, then why aren't I able to offset my environmental credentials to other areas to create them an income, which then they can then deliver environmental aspects, giving me the opportunity to be free to produce, you know, between that 8 to 10% of produce being produced for the masses.
Yeah.
You know, that would in itself create a market.
Yeah. And I mean, it comes down to, I suppose, on a government level, what do you want farmers to be doing, and where do you want them to be doing it? Because
there's not a lot of food security, even though the title's there and they talk about it. But in the reality, with all the various things which are going on, I mean, they stopped the funding now for January the 1st onwards for the next period, and we've got an application in for it's been in since August, so that's sat and done nothing, and now they've cancelled it. Well, part of this project, of course, is part of the catchment sensitive farming in the sense of the concreting of the outside yards, etc. Well, I've already got the planning. I've already had to design what we're doing and then go get the grant, etc. approved. The fact they've just paused it, that is a problem for us because we're already committed to the expenditure. So they pay us once I put the top on. Well, we've been putting the work in to get to the stage to put the top on, and now they've cancelled the funding. It's so damn difficult to work with them.
Yeah.
You just can't. Everything's always, you know, you're always in fear of something coming out. Oh, it's stopping next week.
And it's not just the capital; it's that time, which is capital, which could be invested into other opportunities where there's more certainty, and that's the biggest cost, isn't it? It's like, what do you sacrifice? The opportunity cost in order to do something, which then ultimately the government.
I think they're at risk of the very best people leaving the industry to go off to do something else, because they've made them diversify all these years, so they created new skills, and actually the farming won't be the one they want to put the money in, because we talk about the return on investment. I just think these knee-jerk reactions are suddenly, that's stopped now, but we've already spent all the money to tick the boxes to get it.
Yeah, and we were talking about return on investment earlier, and there is a challenge clearly there in terms of the capital value of owned farmland and the return, the rate of return on that land or on those assets. So the conversation should be around how can we maximise the return.
Yeah.
That should be the focus of all farms, how to maximise the return.
Well, if they put £1 in, they get £7 out. That is a hellishly good return.
Yeah. If you can achieve that.
Yeah. But they say the economy does.
Yeah, well, exactly.
Yeah.
And you target. You say, look at your aspects. You use your benchmark, and what's that? Most businesses in the UK, and you look at the largest ones, and they're in the FTSE or the FTSE 250. And you look at the rate of return over the FTSE over the long term, and you're probably looking at around 6%. So that should be the target.
Yeah.
Is can you get to a competitive level with other industries? And there's a lot of challenges facing agriculture right now, as we know.
Well, if we look at my journey of farming, between what the landowner gets as a whether it's a contract farming payment or a rent, and then the asset value of the land. Currently, they've had a 9.5% to 10% return every year. So far the model's worked really well for me and for the landowner in what we do. And obviously our model is to continue to grow and push on. I mean, I'm hoping the problems we've got at the day are just every year there's been a problem in farming, without fear.
What's your goal then as a business?
25,000 acres is what I set myself a goal some time ago now. And then everything subsidiary on the side of it grows with it. The haulage, the grain storage, the housing, asset, in that sense, continues to grow to support that.
Yeah. And that's half the challenge, isn't it? It's having the target on the horizon.
Oh, yeah.
Because you can't build a business and build a strategy unless there's an end goal there. Otherwise, you sort of
two things get me out of bed each morning: a goal and debt. They're two good reasons to get up in the morning. But, you need borrowing of money to be able to build a business.
Yeah.
There's no other way around it unless it's somehow been sought another way.
Yeah.
But and then you have to create return to be able to maintain the cash flow, the interest to maintain that loan.
And interest rates, to borrow are, if you look on a 5-year basis, looking quite high, but they're still relatively cheap, and there's still a good opportunity to leverage and grow. It's just making sure that leverage is done.
I'm hoping the interest rate comes down.
It's looking like it at the moment. If you look at where, we always look at the longer term treasury yields, which is basically the market's longer term view of interest rates, and they have been starting to come under pressure. So the market is obviously of the view that things will start to look a bit better, but it's going to take time. And you look now at, again, coming back to Trump coming in, all the risks that brings from an inflationary perspective, that might mean that interest rates will drop slower than they were before. And ultimately, everybody looks to the US.
The long-term money we have is a third of the value of today. So, we want to, obviously, before that period expires, we want to see the interest rates have come down. Or I suppose the asset in terms of the land goes up. That's the other way of doing it.
Yeah, absolutely. Or both, preferably sort of meeting in the middle.
No, we're asking for too much. Now we're getting greedy.
Getting optimistic.
Yeah.
It's a Friday.
It's a Friday, yeah.
As you can see behind me, we've got a couple of the trucks are washing out. Unfortunately, they were rejected for live bugs in some Group 1 milling wheat that we were bringing in for store. They've been taken off site to somewhere else to be dealt with and brought back here and washed and sterilised. Other than that, we've been bringing a bit of stone in, been taking some feed barley up north, and we've got some more Group 1 to bring in. We've had several rejections today for ergot, which unfortunately this year seems to be quite an issue.
29th of November, it's just come up to 5 o'clock, getting ready to pick the children up off the buses. The M11's been shut all day, so it's complete carnage in Cambridge. Matilda's managing to get a lift back with somebody else, and the bus is still stuck at the junior school, and it should now be at the next stop to be collected. So have to see how that plays out. A couple of questions which have come through. Combine washing, yes, we do wash the combines typically mostly after harvest while it's warmer, but we'll wash them now. And then we run them all up for a few hours so we get any of the bearings all warm, then we pump them with grease so that we push any water out or whatever we've done. They're going straight in the workshop with the heaters on, and then we're working on them. Part of Simon and the class guys working together on the combines, doing the maxi care. We need the combines clean so we can actually see what we're doing. Richard had already done his, so Kieran's now done his, and now we've just got the other two to do. So we'll sort of do one at a time, taking it in turns so they can share jobs. Chuckle Cousins, Michael and I have laughed about this, so we can't work out who's on the front or the back on the Chuckle Cousins, but Tom might even do a top, he told me, which I can't think of anything worse, but there we go. Fire sticks, somebody said, where can you get the fire sticks from? Spaldings. So Spaldings sell the fire sticks, so contact them, your area rep, or ring the main number and get some organised and try them. Council update. Currently, I've put everything on the system and I've had no update. They've not contacted me. I have tried through somebody else in a different department 2 or 3 times, but nobody from the right department has called me back. So frustratingly, the land drain is backing up with water. UK Power Networks, in regarding to the low power lines when we did in the summer with the combines, etc. I have chased them. I sent the videos to them. I've chased them for an update. Still, that hasn't got resolved, which is interesting because when often you talk to UK Power Networks, they say, oh yeah, as soon as there's a problem, let us know, we'll deal with it immediately. Well, that was back in August, guys. So what are we, nearly December next week? Merchandise update. Now, Tom, poor old Tom's had a right old sweat on this. So the other day I said, oh, we've got the T-shirts like this one here. This one's medium, so you can probably imagine it looked like a boob tube on me. But yeah, so we've got October Drilling for Losers, and Tom's sent some of these out. I think he did them this morning, and also some beanie hats. He's done over 50 sent out today, so hopefully somebody's going to be getting them next week. So anybody else wants some T-shirts and things, get on the website, pxfarms.com, find the shop tab, and get ordering so we can get them out to you pre-Christmas. And we've got something exciting coming next week for children. So really excited when this comes. I'd rather have them here so I can show you them. So we've got some great presents for children coming up. So thanks ever so much. Have a lovely weekend, and we'll see you next week.